Hi guys, welcome to our weekly outlook video, and we're going to map out how we anticipate the market to trade in the coming days or during this current week. So last week and today I've started doing the outlook video Monday evening, due to the reason that Monday's session I find it very useful in guiding us on how we can trade during the rest of the week. So we're going to start looking at dollar, and we've discussed this already in Saturday class on how we anticipate dollar to trade in the following week. So this is just going to be a brief recap of how I expect dollar to trade in the coming week. So from the COT report point of view, we have seen commercials adding plus or minus 2,000 positions on their long exposure, and they've added again another plus or minus 2,000 on their short exposure. Now you can literally see they are holding now roughly about 15,000 net positions, and open interest has massively jumped from 34,000 to 41,800. That's a jump of plus minus 7,600, an increase of over 22%. Now looking at the non-commercials, you can also see the non-commercials have increased their long exposure on dollar, right, from 22 to 27,000, and they've also increased their short exposure. But overall, you need to look at the overall exposure that they've got. If we look on the commercials, overall exposure is 33% to the upside, 33.93% to the upside. It has actually increased, and short exposure is actually decreased. But net, the open interest has increased, and when open interest increases, it means commercial traders there increasing their net positions. So what does this tell us regarding dollar index this week, right? When we go to the chart, right, I'll be anticipating dollar to trade lower, just as it has already done during Monday's session so far, which is almost closing in the next 10 hours or so, an hour and a half or so. Monday session is trading lower inside our monthly bullish order block. We are still in discount range. So as the week progresses, from tomorrow onwards, I'm expecting dollar to at least rally a bit to the upside. Market showed us last week its willingness to trade higher, but we couldn't trade higher anymore. We only tested the close to the 50% mean threshold of this bearish order block, and then we dropped. But now we've got price at 90 level. That's a very critical area of demand. We are now in discount range where we expect price to find support and push to the upside. But it's not gonna be an easy thing. It is going to face a bit stiff competition from the sellers. The buyers, they are definitely gonna face a bit of competition from the sellers, but ultimately I'm expecting price to push to the upside as the week goes by. You can see here we are trading into this H4 premium array, which we explained on Saturday, and in those swing trading concept, that we should see dollar finding support right around the 90.065 level. So expect dollar to find support and push to the upside. Now looking at Euro USD, let's see what the COT report has been telling us. Now on the non-commercials, they've increased their long exposure by So we got 206 to 223. So that's about let's see, 13 plus 4, that's about by 17,000. That's a huge jump, right, that the non-commercials have done there. That's a very big jump. Now you can also see the non-commercials, the short side, they've increased by about 8,000 positions. Now looking at the commercials, the guys that are hedging against the hedge funds, banks and institutions, you can see they've actually reduced their long exposure. On euro, they've reduced their long exposure from 364 to 357,000. They've actually taken profits on their long exposure. And then on their short exposure, they had a massive injection of about so that's 507, 522, so that's 3 plus 10, 13 plus 2, of 15,000. They've injected 15,000 more short position to the downside. And if you look at the euro futures, since the 6th of April, the commercials have been increasing their short exposure on euro futures. Now when you look at open interest jumped from 677,000 all the way to 697,000. That's an increase of just under 20,000. Now when we look at the chart, right, when we come to euro, we can see price is approaching the monthly bearish order block, right? Price is approaching the monthly bearish order block. This is where I expect price to find resistance inside this crash headed area. We've got a rejection block here. This candle, you can see it traded right into the 50% of the monthly bearish order block, and it found resistance and price turned to the downside. So I'm expecting Euro USD to trade into our monthly bearish order block and find resistance where it's gonna trade to upside. You can see above here we've got buy stops. Above these two equal highs, we've got buy stops. Expect market to take out that liquidity pool and drop to the downside. So this is Euro USD. I'm anticipating market to move lower massively by the number that we are seeing here on the commercials report. Now coming to pound USD, now we need to get the numbers for pound USD, because in class we only captured the euro and dollar COT report. So now we need to go to our CFTC website, then we go to the commitment of traders, right? Then we need to go to legacy report, Chicago Mercantile for our pound. As usual, Control F, we look for the British pound. Now for the non-commercials, they're holding long exposure of 64,947. 64,947. They've actually increased their long exposure on pound. These are the non-commercials. When you look at their short exposure, they are holding 37,771. 37,771. So they're actually increasing again their net short positions. Overall, you can see they increased their long exposure and they have reduced their short exposure. Now coming to the commercials, they are holding 63,539. Commercials are holding 63,539. They've increased their long exposure, right? And then short, they're holding 113,115. 113,115. They've increased both sides, right? But you can see overall they've reduced their long exposure and they've also increased their short exposure, right? So meaning we're looking for price to trade into premium on pound, of which we are going to be selling the pound. looking for price to trade, because this is a big increase in their net short position. So let's see open interest. Open interest is sitting at 173,960. 173,960. So that's a big jump in open interest of plus 21,000 positions. That's an increase of 39.89%. That's huge. Now, when we come to the pound, our technical chart, you can see price is now trading inside the daily bearish order block, right? You can see price is trading just above our daily bearish order block. So let me just extend this. You see, guys, this is what I was saying during the class on Saturday, that when you mark your levels, make sure you don't move your levels. The reason being that price will reach there and instantly you will know where price is. So now price is already testing the rejection block on the daily, meaning it's ideal to be hunting for short trade. You see this candle here, this now is our active daily bearish order block. This last up candle here, expect price to find resistance there. And where will be your target? Down here on this bearish rejection block that was broken to the upside. So I'm anticipating pound USD, when it reaches, let me just mark it out quickly, 1.41580. 1.41580. That's an ideal area for you to sell the British pound against US dollar. So now remember, there's a lot involved, especially if you're not in the mentorship. There's a lot that is involved here. It's not just a case of looking at that COT number and then decide, okay, no, I'm going to be selling the pound. You see, above these highs, this high and this high, these are relatively equal highs. There are buy stops there. That's money. There are buy stops that should be cleared out before the market turns to the downside. Then finally, we have gold, right? Let's go to the COT number for gold, and we're gonna find that at the Commodity Exchange Incorporated. This one we don't need to find, it's just here. Right, looking at the non-commercials for gold, they are holding 282161. 282161. Right, let me just copy the date here. I need the date. Right, so that's the non-commercials. They are holding 282161 long exposure, and then short positions they are holding 89906. 89906. They've actually taken profits on their shorts. You can see the short number has reduced and they've increased their long exposure. Now looking at the commercials now, the commercials they are holding 111751, 111751. They've also increased their long exposure by over 8,000 positions. Now their short positions they're holding 338835, 338835, 338835. Yo, that's a big jump. You see that, guys? That's a very huge injection of short positions. They've increased their short exposure on gold, right? These are the commercials. Now let's look at open interest. Open interest is sitting at 498693. 498693. That's a good jump in open interest. Expect gold to move massively in the coming week or two. We've already seen a huge jump past the 1800, which we have all been anticipating. If we go to the chart, this is the chart that we marked last week. If you remember correctly, we were here we highlighted this fair value gap, price filled it in. We had a very nice long position there which yielded about 490 pips. I know most of you guys didn't get much of those, especially those who do not hold positions for long, but you can see where the market is going. Be in a position to highlight, to define where the market is trading to. These buy stops, I highlight them last week. We are heading there. We are going to clear these buy stops and the price will be inside fair value gap. Now expect price to face resistance. The moment it clears these buy stops, ideal conditions for you to be selling the precious metal. We also have yen. We need to see the numbers for the futures report for yen. The numbers for the yen futures. Let me just copy my dates there. Right, so if you are not in the mentorship group, some of this might be Shonglish to you, you might not understand, but if you do a bit of research, you should understand, or you can join the mentorship and we can help you much better. We discuss further in detail regarding the COT report and how we apply it in the mentorship group. Right, so we need JPY. Right, so looking at the yen futures positions, the non-commercials, they are holding 3491. So the non-commercials have taken profit on their long exposure, and then the short, they're holding 72219. 72219. They've slightly also taken profits on their short exposure, so they're taking profits on both sides, but more 72, that's 5, 3128, 31, more on the long side. They're trimming their longs more. Now looking at the commercials, they're holding 99644 longs, 99644. They've increased their long exposure, and then short, they're holding for 44421. 44421. They've taken profits on their short exposure. These guys are looking to trade long, and these are the guys that we follow. Now open interest for yen is sitting at 152404. 152404. That means open interest, they jumped by just 272. That's a mere 0.18%. So now looking at the chart for the yen, I'll be looking to trade to the upside. I'll be looking for yen to trade to the upside, and on this chart, sorry, you can clearly see we've got a fair value gap, right? We have a fair value gap here on the yen. Let me just highlight it for you. We've got price testing this fair value gap, right? And we've got a bullish order block right here, right? We've got a bullish order block, and you can see this is Monday, Thursday, Wednesday. No, this is Monday, Friday, Thursday. See Wednesday's price action. That is a liquidity void, and price didn't stay above this bearish order block, but this willingness for market to trade higher. And can you see the way it's retracing, right? So you can clearly see we've got a swing low to this swing high. Expect price to find resistance once it closes the fair value gap and trades around 108.889. Expect price to find support and bounce to the upside in this range. This is the move that I'm anticipating on USD JPY this week. I'm expecting the yen to find support on the downside and then trade higher. So coming on the H4, you can clearly see the fair value gap is clearly defined. Once we get price trading below 108.889 and between 108.765, which is our optimum trade entry, this is the ideal scenario for you to trade long, right? The moment price gets to 108.765, price will be in deep discount, and expect this daily bullish order block to provide support and price to push to the upside. So this is what I'll be anticipating on USD JPY. I'm expecting another further push to the upside, probably a push that is going to mirror this move that we got here. There's a potential of 142 pips on offer on USD JPY. So I hope you guys have understood perfectly. And if you're not in the mentorship, I know you'll be asking yourself, so are you only using the COT report to make the decisions? No, it's not just the COT report. COT report is just a tool that I use as a guideline to help me in deciding the bias. Already the main bias sits with dollar index, right? And we have seen that price is trying to push to the upside on dollar index, and it's being supported by that monthly bullish order block. Same applies on USD JPY. Price is now testing our monthly bearish order block, an area where we expect price to find resistance and drop. So price is in premium range. So it's not just the COT report, but it's a tool that I've introduced now to the mentorship group. So I'll be including it on our weekly focused videos so that people get to understand it a bit further, because this takes time. To take a couple of weeks for you to understand how to apply the COT report to your trading career. So with that, guys, I wish you good luck and happy trading for the week. And if you haven't subscribed, if you haven't subscribed to the channel, just click subscribe there and make sure you've got the notification icon selected so that every time I upload a video, you get it instantly in your inbox. But if you're not in the mentorship, unfortunately this video you're only gonna see it Wednesday, probably afternoon during NY Open, or Thursday morning. That's for the fact that you're not in the mentorship, and mentorship group should get first preference to our focused. So yeah, that's pretty much about it. And once again, I wish you guys good luck and happy trading. Thank you.